Good afternoon. This is Rich Nelson with Allendale. We have a special discussion here today on this August 12th, 2013 report covering USDA's two reports here. Keep in mind there's one called crop production where USDA does give complete numbers on acreage as well as yields and, of course, production. The separate report is, of course, the supply-demand report, otherwise known as WASDE. That's where we incorporate these changes in production into a full balance sheet, as well as make changes with demand and those issues here. So the main issues as far as today's report, certainly for corn, clearly a surprise. We noted that 15 of the 24 analysts that were submitting estimates for this report were looking for an increase in corn production. Allendale is one of the 9 analysts who suggested lower production here. But for the most part, the size of the decline was a surprise. USDA lowered corn production by 217 million bushels to now 13.763. Yield was similarly lowered here from 156.5 last month to 154.4. So certainly the lower numbers were a surprise. First of all, we got to point out as far as a state-by-state breakdown, we, of course, did see some lower numbers for the Western Corn Belt. That really wasn't that much of a surprise. We will point out that of the Western Corn Belt, the surprises we had were the drop for North Dakota compared with normal conditions of what you would expect. One thing we point out as far as the Eastern Corn Belt, previously we had looked at 4 of the 5 Eastern Corn Belt states posting a record corn yield this year. USDA actually said only 1 of those states would have an increase. So really for the Western Corn Belt, we can't say we're surprised by the numbers overall for Iowa, Minnesota, and Nebraska here. The surprise for us on the Western Corn Belt was that the problems would extend up into the North Dakota region. For the Eastern Corn Belt, as we said, the surprise there was that the numbers weren't as good as what we've been hearing. Now, that may be corrected here in the coming months, but for right now, the trades are on the assumption that we have lower production this month. Also, the trade's mindset will be that on the September supply-demand report, we'll see lower numbers as well due to the August weather, which we are seeing net drying this month here. In addition, bulls are going to start to argue as far as the acres. Many people still tossing out 3 million acre decline still in the works. That won't happen. Really, the numbers will be about 1 million acre decline on the October report, but the trade is still talking of lower acres. Third thing to speak of that bulls can discuss here also is the fact that we saw the frost risk. At this point, the discussion is anywhere from 100 up to 600 million bushels for potential frost risk. And of course, right now, those numbers are simply all up in the air, but the point is right now, we've probably slowed the bearish momentum in terms of numbers for corn, and maybe while we're not ready to turn bullish on corn as far as the trend, maybe for right now, we can at least discuss these other bullish issues with maybe a little more credence than we would have given them just last week here. As far as ending stocks, corn ending stocks at 1.8 billion bushels, still exceedingly large. Need to get numbers down about another 200 to 300 million bushels to start suggesting 450 plus prices for December corn. Over on soybeans, we did expect a decline, and that was seen. The decline was a little more than expected, though, here. USDA dropped corn yields from 44.5 last month down to 42.6. And on a bushel basis, that's 165 million bushel decline. The issue as far as the ending stocks right now, we brought them down from 295 last month down to 220. Now keep in mind, I did mention those bullish issues with corn. We still have August weather to contend with, what the trade assumes will cause further declines in production. In addition, though USDA did lower acreage by 550,000, much of the trade still feels we have a little more decline coming on that October supply-demand report. The third issue to speak of is still frost risk and those issues. That's still a very valid risk here. But for right now, we brought the change in mindset from a very burdensome mindset at 295 million bushels, now 220. We're kind of back to more of a normal mindset in terms of stocks levels. And with the potential declines that many bulls feel are still left here, you're going to start to argue maybe we'll see the sub-200 million bushel numbers. And that's where you can kind of flip to maybe more of a slightly bullish viewpoint here. So that's the issue as far as corn and soybeans. Over on wheat, we didn't see much of a change here as far as numbers. No change for the production numbers for 2013. We did see a slight increase for exports, which is reasonable. And now we have stock levels for wheat at 551 million bushels. Keep in mind that's considered a normal level, not a tight level, at least for wheat. So overall, today's report was bullish for corn It was bullish for soybeans and more or less neutral for wheat. If you have any questions about markets, marketing, or more important, what this means for prices, feel free to give us a call here at Allendale, 1-800-262-7538. Once again, that's 1-800-262-7538. Thank you.